We've got some breaking news, too, that we're following on the economy. Let's take a look at the big board and how the markets are doing after the Fed announced in just the last hour it's going to raise interest rates by 0.5%. Let me just put this another way. It's the biggest rate hike from the Fed in more than 20 years. Right now, I think we can pull it up. You got Fed Chair Jerome Powell. This is a live shot here, I think, talking about the decision right now. He's taking questions from reporters. He's saying the whole point of this, the whole reason for this, is to try to get inflation, soaring prices that you've probably felt, is to try to get that under control. Watch.
Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses.
So this move to raise interest rates is probably going to mean higher interest rates for you on stuff like credit cards, mortgages, car loans, maybe some savings accounts, too, depending on the specific type. You see them on the graphic there. If you already have a mortgage, it's a fixed rate mortgage. Your rate's probably not going to go up. Same thing for car loans that already exist and federal student loans that you already have. Let me bring in NBC News business and tech correspondent Joe Lincoln. So much of this show sometimes when the Fed chair talks, it's about interpreting his tone and the way he's saying things and the exact word language that he's using. So help be our Jay Powell interpreter, if you will. What's the sense of what happens next?
Hallie, I can tell you today actions speak louder than words because so much of this was built into what we expected. Fed Chair Powell signaling over the last month what he was going to do, and unanimously the Federal Reserve voted to do it, to raise those interest rates by 0.5 point. Now, looking ahead, and that's really where the key components of this inflation situation are, we do expect more 0.5 point increases in the next few months, over the next few hikes. He's taken off the table in the press conference the idea of a 0.75 point hike, saying that that might be a little bit too much and could then trigger some of these fears that people have about a possible recession. Now, he did acknowledge that raising rates, reducing inflation, and avoiding a recession is going to be very challenging. But what's interesting here is Fed Chair Powell saying that this is a strong economy, and he says nothing suggests it's close to or vulnerable to a recession. But a lot of economists disagree with that at this point. But you can overall expect rates to be at about 2% by the end of July. And the factors here that they're watching: Ukraine, China, supply chain issues, and of course, looking ahead, it will continue to go up. No changes on the future when it comes to raising rates through the end of the year and possibly into next year, Hallie.